you can start working. When I start working, it has this chart of account which is arranged like this. But now I can make sure that this chart of account appears the way I want to be, depending on what I want. Now here it says that I can enter all the bills I receive from here. If I get a bill, like an electricity bill or things which I have not yet paid, I can enter them here. Then when time comes, you pay those bills. When I'm invoicing customers and billing customers, I can come and click enter the create a bill here, which we call an invoice. Then when the customer pays me, I can receive payment, then I can be able to bank it. So, but before I do all this, I take you through this. I have to set up. When you open QuickBooks, you find that everything is in US dollars. The figures are by default, it is in dollars. Whatever you enter now, it will be in dollars. So what do? You can set up the chart of account, you remove it from dollars to any. So we go to file, edit, then I go to preferences. I want to set that it can be showing Ugandan shillings, because I've seen even some companies using QuickBooks, but when they print a receipt, you see it is in US dollars. So which means this step they missed it. So you come and go to multiple currency, you come to company preference, you say yes. You see here by default, you see there is a US dollar, which means the system will have a US dollar as a default currency. You click here, it will ask you this, you say yes, because once you turn it on, you can't change it, you can't edit it if you make a mess up here. Then you click on view more currency. After clicking on view more currency, you select the currency you are going to use. If it is Ugandan shillings, you come here and select Ugandan shillings. Then you make it active. Then you're about to use a non-US dollar. It is okay. Then it will appear here. It is not yet complete. Then you click OK to activate it. You click OK to activate it. Now our local currency has been activated. Okay. It's taking long, but it's coming. Because whenever you activate it, it just goes off, it and comes back. So once this one is activated, I want to change this chart of account to appear in, to add more features. For example, I want to include a lot of things, receiving cash. I can come here and I come and edit. Again, I change some preferences. If I want to be managing inventory, I come to inventories here. I come to company preference. Then I say if inventory purchase orders are active, I come and allow it. Then I click OK. You're going to see also now, you're going to see the display when it has changed. It has changed in this. So this is part of setting up the company. It is part of setting up the company, because remember we have not yet entered anything in the books of in the system. So what I'm going to do, we are going to generate transactions. We enter the opening balances, then we do some selling on credit, just like 2 or 3 transactions, then we display reports. It is just a demo, then we'll be able to display reports. So you've seen now the chart is changing. You can be able to record the purchases, orders, you can receive payment, you can also pay the bills against the payment, you can be able to pay, enter the bill. So you see these ones have been added after activating the other one. So we have others which you can activate, but for activation we can stop there. We can stop there. I can go and activate this payment, because remember when we pay we have different accounts where money will be going. I come and activate this undeposited fund account, so that when I'm paying I can be able to select the bank where I can deposit activated it. So now how do I enter customer bills? Because you said all of you are in health services, MBA health services. So we are going to have some few transactions in health, so that we can be able to generate what we call a trial balance, and we see how transactions are done. Now, okay, okay. Now I'm going to, you've been talking about a chart of accounts. A chart of account is a list of all the accounts and their numbers, classifying them into assets, liabilities, equity, income, and expenses. This is a chart of account. This QuickBooks can give codes to accounts, but here they are hidden. I can also activate the codes. So each code can represent a given code, a class where the account belongs. That is a chart of accounts. Now let me go and activate a chart of accounts. I activate the codes. So when I go back here, I go to edit, I go back to preference, then I go to accounting, then I can go to company preference, then I see use account numbers here. Then I click OK. I click OK. So after clicking OK, the chart account now, when I go back and check, you find their codes. You've seen these codes. Remember before they were not there. A code beginning with 1. 1 is an asset. Any account beginning with 1 is an asset. Any account beginning with 2 is a liability. Any account beginning with 3 is under equity. And any account beginning with 4 is under incomes. And any account beginning with 5 is under cost of sales. And any account beginning with 6 is an expense. So you realize that sometimes you might find in a company you don't understand the account. Is it an income? You can look at the code, the chart of account, or you can ask them for their chart of accounts. Then the chart of account, it can tell you this is an asset, this is a liability, this is equity. Different doesn't mean that every company uses the same codes. No. When you look at also people are using Sun system, the system has its own codes. So you just need to familiarize yourself with the code, and you know how to classify the accounts accordingly. So I don't need to use chart of accounts. I can go and deactivate them so that those codes can disappear. I don't need them. I don't need them. Can go and deactivate them so that they can disappear. So now they have gone. You can't see them here. Now, how do we enter the opening balance of transactions? For example, you are setting up a company for the first time and you want to enter the opening balance of each transactions. I can just go here to accountant, then I make general journal entries, and these general journal entries will cover transactions. I'm entering the opening balance. For example, if I have, so now this is where the concept of debit and credit, you must have it. For example, if I have furniture and equipment, which I have, this is an asset. Assets have a normal debit balance. I'll put the cost of 1 million in the debit side. Then I can put this one as an opening balance equity. Then I go to another asset which I have, for example, we have the accumulated depreciation, the medical equipment. If so, if I have that is an asset. Remember in accounting we said all assets have a normal debit balance. Maybe it is 2 million. I want us to generate different transactions together because it is just studying. We have, for example, some medical and promotion. This is an expense. Expense have a normal debit balance. Maybe this is 500,000. So I can have also some liabilities like income tax payable, income taxes payable. Remember, this is not in the system. I can just press the enter button twice. I go to setting it up. I know that income tax payable is a liability. I can come here and go and put it under other types. I go to current, other current liabilities. Then I click continue. Then I save and close. So I will have created that account. I put here maybe it is 900,000. Then remember liabilities have a normal credit balance. That's why. So this figure will always be going to a side which has the lowest total, because remember when I'm using a journal entry, the total debit is supposed to equal to the total credit. Then for example, if you have maybe the members, which one else that I can have maybe capital, like the inventory items I'm going to show you how to do. So I can leave this figure to the opening balance equity to be there, then so that we can be able to see how we can enter opening balances. So I can save and close. If I want to leave this page, I can save and close. It saves. So if I'm to go and click on any report here, I want to see the report so far what I've entered, and I want to go and see, maybe let me go and see the trial balance. Trial balance, I'll find it on accountant and the taxes. I can be able to generate the trial balance for what I have entered. Now it shows 0 because it will showing from from 1st October to this. But remember, I entered these balances on 1st January. So if I go back, I select 1st January and up to 30th October. I can even go up to today's date. Today is when? 18th. Can go on today's date. Then I click refresh. The figures I've entered, they are here. The trial balance, it is balancing. This is the trial balance. The system can be able to do that because memorize what you have entered. Then the company name, you can see this is what we did. This we named it MBA Health Services, trial balance as of this date. Then we can also go and enter. For example, if we buy, because we said we need to look at buying things. We haven't created any cash or bank account. We can also still create a bank account. And how do you create it? I can create it from here, even using I can create it from here. I can go to revenue chart of account here. There are many ways. Then I right click. I can create what we call a new account. I say I want to create a bank account. For example, I have several banks and I want to create a bank account. So I will start with which bank? DTB, Diamond Trust Bank, TB Bank. I can put even what we call the description, that bank, what account, details about it. Account number, if you have the account number, you can save it here. Routing number, also you can put it here. Then you can, if we had an opening balance, we can click here to enter the opening balance of that bank account. For example, in that bank account, I have 2 million. 2 million as opening balances. That was in 20. It was there at the end of the period, which as of January. Then I can click OK. Then I can save and close if I want to leave. If I want to stay, I save and new. So when I save and new, it saves and leaves me in the same page. The other things are the ones which disappear. Then it leaves you in the same page. Then you enter others. So you find now we have the bank balance, it is debit, it is 2 million. Now, we are looking at, let's look at situations where we are going to assume that we are going to make a purchase order for some items, then we receive them, then we pay them. So we are going to make an order, ordering from the suppliers' names. Those are vendors here. Vendors, you put the supplier's name. Let me keep it. This is the First Pharmacy. If this is our supplier, pharmacy, it is First Pharmacy. I can enter to create the customer. I've already created that customer. Then I go on the items I want from that First Pharmacy. Now, for example, now I want to buy medicine. Like I can have Panadol, paracetamol. That is the item I'm buying. I can set it up. Paracetamol is an inventory part. Why do we select inventory part? Because remember, I'm buying this Panadol, I'm going to be selling them to a customer. So it will set it up in the item name. Then I go on the unit of measure. Unit of measure, we have single and multiple. Single and multiple, sometimes you might be buying in a packet, but you sell in pieces per item. So you can use multiple to say that one packet has maybe 12 pieces. This and that, so you can set that one from multiple. Now I'm going to use single because I'm going to use a single unit of measure. I can come here to others. Then I put, for example, I'll be buying in a packet. Packet, or you can put a box. A packet. So the abbreviation is PCT. Then finish. When I finish entering the packet, it will ask for what is the cost of one packet. So each packet, if for example, if one packet costs the cost of a packet, maybe we say it is 2,000. Yes. Then I'm just assuming, and I sell it at 2,500. Now The system will compute for you the markup and the margin rates are here. Then the profit margin and the markup. Who is the vendor? The vendor is still First Pharmacy, is the supplier. The income account, remember you must have an income account where whenever you sell that item, it should be allocated. So we are going to have Panado, paracetamol, sales. Now I can set it up. These paracetamol sales are under what we call, this is an income account. This paracetamol sales, I can put it as an income account, then I can save and close. So I don't have any at hand. I'm just going to buy. I click OK. So I'm ordering for how many? Since I've already entered the cost, each one cost. So if I'm ordering 180 pieces, the system will multiply 180 I'm buying times the 2000 I'm buying to show you how much I'm expecting to pay. That is paracetamol. If I'm also ordering for maybe, which other medicine? Me, I'm not in health. You can just give me anything else.
ACT.
ACT. ACT is measured in what? It is an inventory item. What is the unit of measure? Is it also in packets, boxes, or what?
Yeah, it's in packets.
So we can come and select packets. So what is the cost of a packet when you are buying?
2,100.
2,100. At when you are selling, you always sell it at what?
At 4,000.
4,000. So the income account, we are going to have what we call ACT. Why do I do ACT as an income account? Because you need to keep on tracking which drug is selling more than the other. Are you getting it? So all the sales for that specific drug, you'll be able to see them. If you put them in one sales account, you cannot know which product is giving you more sales than the other. So I can do that one, I save and close. So we can see the preferred supplier. Where are we buying? Also, let me say that we are getting it from First Pharmacy, and I can click here. Okay. Then what is the, how many packets can we order?
We order for 50.
50 packets. So the system will multiply 50 times 2,100. It will show you that this is how much you are expecting to pay, the 105. So in total, if these are the only two products we are ordering, in total, we are going to have a total amount which is supposed to be paid of 465,000. Then I can save this order and close. After saving that order, time will reach when I need to receive what I ordered. I need to go and buy. Now you'll say, you'll make a call and you tell First Pharmacy to supply you what you've ordered. The order, remember, you have put it in the system. So the time for supplying, you're going to come and receive inventory. And when you're receiving the inventory, you can receive inventory with a bill, or you can receive inventory without a bill, then you enter the bill later. But now we are going to receive inventory, which we ordered from First Pharmacy, then with a bill. So what we come here. The first thing you see something in the bill, then you'll ask where you are receiving the bill. You are receiving goods from who? you come and select the inventory. The system will tell you that this vendor has an order already existing. The moment you are receiving the goods you had ordered, you click on yes. If you are receiving goods which you had not ordered, you can enter those items here. You click yes. The moment you click yes, it will give you the order number. I come and tick here from First Farmers. All the orders you have made, even if they are 20, will appear here from that supplier. Then you click OK. When I click OK, the orders come here. These are the items I'm receiving. And when I receive like this, the moment I click save and close, the system is going to create a payable immediately. Are you getting it? Because remember, it means we have received the goods, but we have not yet paid for them. Remember, when I entered it as an order, the system does not capture it anywhere. It becomes non-financial. But the moment I receive, I click, I acknowledge this bill in the books of accounts, immediately the system will create what we call accounts payable. Let me click save and close, then we can check on our balance sheet and we see. When we go and check on our reports here, reports, I go to the trial balance, you're going to see a change. Let me take it from January so that all the figures can be there. January. You're going to see there is a change. There is what we call accounts payable. Are you seeing the accounts payable? Do you know how it has come about? This accounts payable has come about as a result of receiving the goods. Let me first go up 31st December so that everything can be there. It has come in as a result of, this accounts payable has come in as a result of the goods we have received, yes, on credit. So the system, what they do, they will debit the inventory. Are you seeing the inventory? This is the stock we have, and it will be able to credit the accounts payable. This is the accounts payable, this is the inventory. And when you want to know whom are you supposed to pay, you can come and click here. It will take you in details that these were goods which were got from First Pharmacy here. Even to show you the date when you acquired those goods. So the system will always be able to tell you everything. Then it takes you back to the inventory, to the what which you have entered. So now we are going to pay this supplier. Now, what if we decide that we are not going to pay him the entire amount? We are going to pay him only 400,000. Then he remains demanding us 65. So what we'll do, we'll go and pay. I'll come here and click on pay bills. When I click on pay bills, the system will always, all the bills which have been recognized but have not yet been paid will appear here. What I do, I come and click here. The moment I click here, the system will show that you are paying the entire amount. But for us, we are not going to pay the entire amount to zero. We are going to pay only 400,000. So that the balance can remain. The balance becomes how much? 1,600. And which account are you using to pay? Here you come and select the bank account you are using to pay. Remember, we have a bank account which is Diamond Trust Bank. In the Diamond Trust Bank, we have 1.6 million. All the money you have on the bank account will be reflected here. Here you'll have the date of payment. If it is not, you can come and say maybe we are paying on 31st January. Then after this, with the method of payment, we are using check or credit card, you can click there. So are you having a discount? You can set up discounts and the credit terms here. So you can click pay the selected bill. When I pay the selected bill, it will show that it has finished paying. If I have a printer, I can click print this check, and so that I can put it on my file as a source document. So I can click close. So when I go back to the reports and I go to company and financial, no, I go to the trial balance. I go to trial balance. I reach here on the trial balance. I can be able to show you now how much will be the payable after I have paid. After I have paid, how much will be the payable? So how much is the payable now? You realize that now the payable has changed from 465 to 65,000 because I paid 400. And now, because I paid using my cash, the amount of I had, remember in the DTP bank, we entered 2 million. So 2 million, I have paid 1.6. I'll paid 400,000. In the bank account, I'll remain with 1.6. That's why you see the system will do the double entry system for you, and everything will be able to balance. Now let me make a sale. I've been demonstrating on the side of this side. Now let me demonstrate this side. Assuming I have got a customer and I want to bill this customer. Who can give me, can we create one customer? Create for me a customer. Can you create for me a customer?
Customer for service delivery. Maybe a patient has come
Yes.
in, done a malaria test at
Mm.
20,000,
Okay,
and
now
then
let's name the patient. Should we just call them walk-in patients, or we just have a specific patient? You know,
we can say
sometimes it's better
walk-in
you
patient.
walk. Okay, you generate one name of the patient. Kayemba John. You can even come and set up, you enter the details about Kayemba John, his name, his location, phone number. You've seen them here. Home address, all their details, you can put them here. Phone number, workplace, where do you work? We found you have the fax. If you have your email, all the information you can be able to capture about Kayemba John as you're entering that person in the system. I say, okay. Then I have created Kayemba John. So Kayemba John has come, and we have treated him. We are going to bill him for, remember there is consultation fee, isn't it? Should we also
Yes,
charge Kayemba John consultation fee? So
yes.
I'll start with consultation fee. I set it up. No, this is on quantity, so I've typed it on wrong. I'll come here on the item code, I put consultation fee. When I set it up on the consultation fee, I'll come here and I put is a service. You get it? It's not an event, you don't sell it, is a service you're offering. You put it as a service charge. So how do you measure it? It may not have a unit of measurement. How much do you charge for consultation?
50,000.
50,000. So you put 50,000, you click OK. Sorry, I made a mistake. Okay, where I'm supposed to put the account, I put the fee is supposed to go where the rate is. So here we have 50,000. Then which account? I'm going to have consultation fee account. Consultation fee account. Then also I will name it, it will be an income account. I have set it up. So I have created it. So the consultation fee, it is here 50,000. You've seen it has come. We are charging him. Also, apart from that, what else? We can sell the medicine we bought, isn't it?
Maybe lab investigation.
Which one? Lab investigation. Yes, we have lab investigation. It is an income. And the lab investigation we are charging this Kayemba is also a service fee. So how much should we charge him?
80,000.
80,000. Those are service charges. Also, we just put it lab investigation fee as an income account. So we can save it. How much is the it is 80,000, so it is now 130. What else should we charge? Admission fee.
Yes, we can charge admission.
Let's charge this admission, then we give the drugs, then we can stop there. Admission fee. When a patient comes and you are going to be charging him admission fee. Admission fee, what is the rate? The rate can change. So it is doesn't need to be constant. Let's assume that he has a day is how much?
We can 120.
150,
120.
120,000. Okay. Now this is 120,000. Okay, I have to select the income account. This is admission fee account. It is an income account. So it is, she charges 120 per day. So how many days was he there? We assume that he was there for two days, isn't it?
2 days. Yeah,
So the
2
moment
days.
I put here 2, the system multiplies it, it becomes 240. You've seen it here.
Yes.
Yes, the moment I put the quantity. Now we are going to sell him also medicine, isn't it? We are going to sell, remember we put some medicine. We have ACT. Remember each one we sell it at 4,000. How many packets should we charge them? How many packets should we give? Elme? Did we buy 4? How many did we buy last time? We bought more than 4, isn't it? Yeah, so we are charged 4. Should we also give him paracetamol? How many? How many?
3.
3. So now the total we are charging him is 393,500 as our income, isn't it? If only that medical things are not having VAT. If we had VAT also, I can activate. You see all the things to be charged VAT. Should we activate it or we just leave it? But remember, medical don't attract VAT. But for learning purpose, if you want, I can activate it.
Yeah, maybe you activate and we see.
So I come here and I put new tax. When I do tax, this one is called tax sales tax item. Then what is the tax? It is VAT. It is VAT, which the description is a sales tax. And what is the rate? Our VAT in Uganda is which rate? 18%. And who is the vendor? Uganda Revenue Authority. So I set it up. I click OK. The moment I click OK, have you seen the system? It has already computed VAT. The amount has changed. So which means the total sales tax, it is now, this is what I'm going to collect from this customer. It is no longer the 399 we had. So if all these services are provided are VAT avatable services and the items, the system will compute VAT and be able to show you how much the customer is supposed to pay. So at the end of it all, I'll be able to save and close. When I save and close, remember I was receiving invoicing. When you invoice a customer, the system will capture it as sales immediately. Are you getting it? As long as you invoice the customer like this, the system will capture it as income. That's why even when we go to the profit, we go to reports here, and I show you, if I go to the income statement, remember we are using accrual, profit or loss standard. We have this expense. Let me go backwards to January. You are going to see we have now income. Are you seeing the source of income? We have sold, we have administered ACT, we charged this. Admission fee for 2 days is this. Consultancy fee 50, lab investigation fee 80, then the paracetamol we sold. This is the amount of the sales we have made. Remember, when we are selling, we had bought paracetamol and the ACT. The cost of the units we have sold is 14,400. Are you getting it? So the system will expense the cost of these two items we have sold, the ACT and the paracetamol, at 14,400, so that it can be able to give us what we call the gross profit. Now the gross profit, remember we had admission and promotion, which I entered earlier. So it will have 500,000. Because the expense is exceeding the gross profit, we'll have a net loss of this. Are you getting it? This is a profit or loss. I can still show it in the trial balance. I can still show it in the trial balance by going to reports. Then we have this. So the trial balance also can be able to reflect that, which we are from doing. So the trial balance is here. We have, these are incomes. Most of them are incomes plus one of the liabilities. Then we have the cost of goods sold, which we have here. And if I go beyond this, I will have what we call a net loss. When I adjust it, I will have the expenses, promotion, they are here, and all the things are reported. So this is a trial balance. So whatever you put in the system, remember the accounts payable, we have the income taxes payable. Remember we had already written one of the income tax payable earlier. So now it has added, it has increased. It has 900,000. We have the sales tax payable. The sales tax we charged on these items which we collected. We have the account receivable has still this, because remember these were the sales which we have made. This is what we expect to collect from this customer. Out of this collection, we have a tax of this. The remaining balance becomes income. So now let's go and make payments. Let's go and receive payment. Mm, mm, yes. Yes, thank you so much. When you sell on credit, the system will create an account receivable, which you study in the fundamentals of accounting, that when goods are sold on credit, you debit account receivable and you credit sales. That's why you see in the trial balance, the account receivable are debited and the sales have been credited. That's what you have to do. So now what you are studying in class, that is what we call, you are doing it now practically. The system is doing it for you when you're just posting. Then we can come and receive payment. When we receive payment, automatically the system will ask you, you are receiving payment from who? The person, remember we build, now Kauma John has come, Kayemba John has come to pay. The system will show you how much you are demanding Kayemba John. You're demanding him how much? 464, 330. So I'll come here if a payment is cash or check. Assuming he wrote a check, I come and click on a check. After clicking on a check, then I come and tick on the figure here. The moment I click on it, the figure automatically takes itself here. So the system will assume that I'm receiving payment of the full amount. If you have a check number, you come and write the check number here. If you have a check number, you come and write it here. So now, where are you depositing the money? When we are depositing the money, we should be able to select the bank account where we are depositing the money. Now, assuming we are depositing the money to Diamond Trust Bank, that's why we're depositing. So if let's receive this time full amount, you're going to see the account receivable going to 0. And you're going to see our bank account. Remember, on our bank account, we have 1.6. Now, when I receive 464, it will be now 2,064,033, 330. So let me receive full amount. Then I can come say save and close. When I save and close, I go back and check on my reports. You are going to find out that the account receivable is no longer there. The account receivable is no longer there. The account receivable is no longer there. So are you still seeing the account receivable has gone to 0? But what has happened to the bank? The bank has increased from 1.6, now it is 2,064,330. So which means in this case, we debited the bank and we created the accounts receivable. That's why it has gone to 0. So this is what happens. So you see, the more transactions you do, as long as you know how to deal with these things, what debit and credit means, you see things will start being posted automatically. So which means we are not demanding anyone. So when you sell on the credit, the system updates like that. So after that, I can just also do another part of the transfer. If I want to transfer money from one bank to another, I can come to banking, then I make deposit. I do transfer funds. If I want to bank the money, I can make deposit. If I want to write a check for payment, I can click write a check. So let me transfer money. Assuming now I want to transfer money from Diamond Trust Bank to Equity Bank. Let me transfer it on this date. Transferring on October 30th. I'm transferring from in DTB, that's where we have money. Remember, we have that amount of money, but we are transferring it to Equity Bank. So we have an Equity Bank we are setting up as a bank account. We are transferring, let's transfer 1 million. How much we are transferring? I'll put 1 million. When we transfer that money, 1 million, it means the DTB is going to reduce by 1 million and the equity will be able to increase by 1 million. So when I save and close, then I go back and check on the balances. Even if I go back here in the banking, I say make deposits or transfer funds. Banking, I say transfer funds. I select, you find that now in DTB there is 1 million. Now, even when I select here, for example, Equity Bank, the bank will find 1 million. So which means now I have already transferred and those bank accounts have those balances. There are several reports you can produce. I can show you the balance sheet. I can go to reports, income and financial. Then I can be able to prepare a statement of financial position. It is here. You see, the system will always prepare for a statement of financial position. Statement of financial position is here. That is what we call a balance sheet. And the balance, you see the balance we have in the bank, DTB, and what we have in the equity, the inventory we have, which the stock which is not yet sold, the fixed assets we entered when we are starting to get the total assets. The liabilities they are demanding us is here. We have the 65, that is the current. We have other current liabilities. We have like the income tax payable of this we have to pay to URA. We have to pay also the VAT which we charged and the profit opening balance equity which was there, and also what we have as our net loss. This 120 is the net loss which I showed you in the profit or loss, and that is what we call a balance sheet or statement of financial position. Now also you can generate what we call other reports. There are several reports you can generate for management. You can do the graph. You can be able to do vendor aging analysis. You have had aging of payable as receivables, accounts payable aging analysis. You can do inventory purchases. You can assess inventory by vendor. You can also do a lot of, we don't have employees. We can do, even we can look at the graph financial statement. We can present them in form of graph by customer, income and expense graph. You can have it. You can even get a forecast. It can even generate what we call a statement of cash flow. So cash flow, if you want to see it, it is here. A cash flow will show how much cash has been coming in. This is using the indirect method. The system can present what we call a cash flow statement, and then later it can show you how much cash has come in and how much has been spent and your net cash balance. Remember, this is the total cash we have at the end of the period. Investing activities, this is the cash we spent to buy furniture, the cash we spent to buy equipment. We have financing activities, then we have operating activities. If you have studied about cash flow, it has those three sections: cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity. Then you can be able to get an increase or decrease in cash. Then you add the opening cash balance to get the end cash balance. It can be able to show you all that. It can also show you graphs, reports in form of graphs, and the presentation. If I want to see the income and expenditure graph, it can generate it for me. It shows you which period we made more income and which one made most expense. This is advertising. You see it is covering a bigger expense, and this one cost of goods sold. So it can show even in the periods when you made more sales, when you incurred more expenses. And we have by customer. You can click by customer, by class. You can click by any part of the transaction you want. So it can generate for you different reports. If you want to do aging analysis, even you can do budgeting. You know budgeting? You can set your actual and you compute variances and many other performance. You can generate reports about the budget performance. This QuickBooks can do everything. Now I can look at the last one, which is security. We said, how do we set different roles to different users? Someone talked about it.